every conversation today, and it's been in many a headline the last year or two. And I have to admit, I laid awake one night, my mind reeling after reading a particularly sensational article that predicted 50% of white-collar workers would be out of jobs in 18 months. Let's all adjust our white collars here. I felt the need to hoard cash under my mattress. There was this big, black, recessionary cloud hanging over us. I was worried about the economic implications. I was worried about, gosh, am I using AI wrong in my day-to-day? And frankly, I was worried about my kids. How am I going to launch them into successful adults with this giant job-sucking vacuum out there? Now, the beauty of an anxiety attack like that is it does motivate you to find some solutions and find some rational thinking or other perspectives on those concerns. In addition to doing a little of my own vibe coding, and please come talk to me about it later because I won't stop talking about it, I found a lot of really good resources. And one thing that calmed me was the recognition that the author of that particular article definitely had something to sell when he wrote that sensational article. So I had to take some rational perspective on that. One of my favorite quotes that I found as I was doing my research after this massive anxiety attack was an article by Citadel. And they explained this revolution relative to past revolutions and reminded the readers that the famous economist Keynes, and I'm going to quote this, underestimated the elasticity of human want. Let me let that sink in for a second. Let's talk about elasticity, the ability to grow and stretch and expand. And it was human want, not human need. We underestimated the elasticity of human want in many parts of the Industrial Revolution. If you think back, something just as simple as the washer and dryer. It didn't create more free time for families as was predicted. It changed expectations. Expectations were for clean clothes every day. We saw a massive expansion of industries from fashion to retail to closet design. Everything grew around that shift, and I would imagine the original engineers behind the spin cycle weren't thinking about changing consumption patterns when they were designing that, but that's exactly where it led. So I'm going to cue our audience survey from the break, and I think all of 9 of you participated, so I'm going to try to keep the energy up. It's not too late to snap a picture of the QR, but I asked you how you felt AI was going to affect you. And a few optimists in the room, and a few people are equally as concerned about my kids, so thank you very much. But I think that that's the nature. Oh, there's a few more responses coming in, and it's growing. Thank you very much. So I would like to move on to introduce our panel. I'm delighted to be joined on stage by 3 experts in technology, engineering, and investments to provide some perspectives on this tremendous revolution. I'm hopeful that we can share some insights that all of us as business leaders can be thinking about as we cultivate talent within our organizations, as we think about how we ensure we have tomorrow's leaders, even if we may need fewer entry-level positions, how we guide our youth in career and college planning, and importantly, how we navigate these tremendous headwinds and tailwinds in the investment market. I'm joined to my immediate left by Daniel Lim, who until recently was a futurist in Salesforce Futures, but now is a vice president at Mission Force, excuse me. He'll explain more in a second. And then down at the end is Deepti Gupta, an engineer by trade, but someone who's leading AI strategy and enterprise transformation at Microsoft. And then in the middle, Bryant Vancronkhite, a senior equity portfolio manager at Allspring Global Investors. Each of them will share a little bit more of their backgrounds as we dive in, but I'm going to start talking about the future first. So Daniel, I used the washing machine example. You've used the steam engine as an example. You said we're at the steam engine stage and we need to look beyond the hype. How do you see AI reshaping organizations over the next decade?
Yeah, thank you. Thank you, Shelly. Thank you for Russell for inviting me here, and thank you to the panelists. So you mentioned I have a wonderful job. I've had a wonderful job as being a futurist at Salesforce. So I get to think about the future. Entirely my job. But there's some serious implications with that. with some of the futures that I think about, at the end of the day, I dabble in uncertainties. Basically things that about the future that we don't have answers to, but yet our executives, our customers, and you all are making decisions every single moment of the day, right? Making investment decisions, management decisions, right? And I get to play with that and create scenarios of the future on what the future of work may look like, for example, right? And you mentioned my new role, I'm actually following the path of General Gibson, where we're at a stage where the collision of geopolitics and technology is coming directly together. And moving into the position of helping Salesforce figure out our product strategy as it relates to defense and national security, and as well as doing scenario planning with our military and government partners around the globe, right? So to your question, it's really helpful to think historically. So you started with the washing machine, right? And the idea around industrialization, and you look back, the steam engine, that was what powered most manufacturing floors for many decades, right? And when the electric motor came along, it actually took about 30 years before the manufacturing floor got reconfigured to optimize for that new invention, right? There's no longer a need for the heaviest and the most power consumptive machinery to sit next to the steam engine anymore, right? So you look at AI, some folks earlier today mentioned that we're in the first inning of AI, using baseball as an analogy, right? We're in that mode where we're the steam engine. We just swapped over to say, hey, maybe there's a more intelligent computing paradigm for us in AI. And currently, most organizations are still putting the heaviest machinery around where the key nuggets of knowledge is in knowledge work, where there is the chief investment officer, where there is a middle manager who has a piece of information that's most critical to getting the job done, right? You think about the advent of management. It used to be that there's a CEO, right? They run the company and they just hand the tasks to people. But as companies scaled, as a result of that, they're professional managers, the middle managers. Those are the hubs. They are the steam engines of this AI era. I actually think that, currently you mentioned the job market and the concerns about and so on. Now, there are many causes of what this job market looks like. It's somewhat frozen, especially for the younger generation. What we're seeing in the more modern organizations, they're willing to adopt technology and leverage AI and change the way they work and move away from that steam engine, the old knowledge worker of the past. They're hiring young people. In fact, the way I see it is that, like the middle manager, in fact, every technological innovation has cut out the middle person. AI will likely do that with middle management, right? People held on to power as a way to gain leverage. Now, you can add other value. You also need accountability, you need permissions, you need vision, mentorship, and so on. All these things are part of leadership. But I see the future of work as being definitely more flat, but the thinning out of kind of the middle layer a little bit, right? So this is that kind of the current, like I talk about the first two horizon, but if you advance it to the future, we will likely get to the point where agents, AI agents will be talking to AI agents as part of the way we work, right? Your investments, there's somebody at the other end of the deal, at the end of that trade. I see a lot of companies come to Salesforce saying, I want to implement AI, make myself more efficient. Well, that's a one-sided game because you need to think about your customers, your partners, and all these other entities who will always also deploy AI agents as a way to interact with you. So we're preparing for that future at Salesforce. So.
Yeah, it's fantastic. It parallels a lot of the conversations we had about the restructuring of the bond markets today and both sides of those trades. So Bryant, let me bring it to you. And similar to what Daniel has said with respect to the cycle or where we're at in that phase, you've described to me that AI, for investors, AI as a journey with different phases. So help us understand those phases and where we're at today.
Yeah, sure, happy to. So my team spends our day thinking about how companies are going to use their balance sheets to create a very different future financial profile. How are they going to invest to change their destiny? And we own companies based on that. Then you put them together and they create a profile for an overall portfolio. And one of the most important things we thought about coming into 2026 was, where does each company sit on this AI journey over the next year? There's not a single CEO we talked to today that doesn't think about AI as one of their top priorities. So where are they on this journey? And coming into the year, we see 3 phases that every investment portfolio must be invested in. And the weight you allocate to each phase should vary based on current valuations, where we are with each company's life cycle, et cetera. And so when we look at today, the 3 phases that we're focused on for 2026 in the AI journey is number 1, extension. Right, last year it was all about a very narrow market. There were only a handful of companies that were really benefiting from the AI CapEx build out. NVIDIA comes to mind, obviously, a couple of the mega cap companies. That was never gonna last. A lot of companies were aggressively investing in trying to get themselves on the right highway of this journey. And all of a sudden you've seen the extension phase play out by having the memory names working now and the fiber optic names working. And that was an important step. And that's phase 1. And that we need that to be our biggest weight in the early part of the year. That's gonna quickly hand off, I think, right now to phase 2, which is implementation. If phase 1 is about building the brains of AI, phase 2 is about building the body, bringing it to the physical world. And that takes a lot of work. And we have companies in the portfolio that are helping with the R&D, the simulation, the testings, and allowing us now to implement this in our handsets, our autos, our washing machines probably, right? And these implementation phase is gonna be a much longer phase than phase 1, but we need companies in that portion of our portfolio, and that's kicking off right now in what we're seeing. And the 3rd phase is realization, and this will be a very long phase in my mind. But how do we take the brains and the body that we've now built and create real value out of this? How do you let a company, I think this is where you're really focused, how do companies take this potential and make it real? I, for one, think most companies are gonna do it through expense cuts and efficiencies, not new revenue models, but time will tell, at least what we have available to us in the public markets today. But we have companies who are gonna help implement that both at the personal level and at the corporate level. And that's gonna be a very important phase. And so from a portfolio standpoint, what we're focused on is where is each company within this journey? How are companies individually investing to drive their own destiny? It can feel very much like our course is set for us right now. That's not true. I think companies have a lot of potential to drive their own destiny still by investing wisely. And then so as that's happening, how do we move our portfolio along with it? And that's critical, I think, not just within our portfolio, but when how you think about your allocations to venture, to private credit, to private equity, to public equities, to the bond markets. Each of those capital markets will play differently along these journeys as well. And so the most important thing is not being complacent, right? A portfolio that was relying on NVIDIA to be their only way to play AI through 2026 and 2027 is gonna look really bad right now. So complacency is tough. Follow the journey, have your own view of the journey, and make sure you're allocating accordingly across the phases.
And I think, Brian, one of the things you said to me in our prep call is you did warn us, it's a great time to lose a lot of money. So be careful.
Yeah, it's very, very possible, and I'm sure we'll talk more about that.
Yeah,
a lot of places lose money today.
Okay, great. Well, so you mentioned ROI. So Deepti, you come from an engineering background, but your job today is to help Microsoft deliver ROI to Microsoft's shareholders from AI. While Microsoft's obviously helping all of us, or working hard to help many of us deliver ROI to our own. So tell us a little bit of your background, but tell us how you help us understand how you're quantifying this ROI.
Thanks, Shelly. Hello, everyone. Deepti here. I work for Microsoft, and the last few months I have been focused on, AI transformation piece of the game, and how can we translate this to internal ROI. And 2026 onwards, like this was talked about in Davos, 2026 onwards, we are moving away from AI experimentation to actually diffusing this technology within companies, but thinking that as part of redesigning our workflows end to end. So enforcing some sort of change management. And much of my perspective comes from this 90s lean era. Not necessarily the companies back then were not necessarily were the ones who created the technology, were the ones who were able to think about their work artifacts, day-to-day operations, and utilize technology to be able to enforce the adoption, the technology adoption back then. So that's how I think about even internalizing ROI within Microsoft. I'll give a concrete example. So I worked on a project called Code to Cash, and in a very layman term, like, what does it even mean, like, code to cash? It's like this is this whole process where there is a code generation that happens, and at the end of the process, the outcome is that we have a revenue collection that needs to happen. Now, processes are messy. Like, there are so many people involved in these processes end to end. So we had Microsoft customers informing us, giving us feedback that it's very hard to onboard onto Microsoft platforms. And so we were like, great feedback. We found that internally within Microsoft, we had huge team of people who were actually working to make this process work end to end for our customers. So, the leadership alignment happened on how to even think about improving the customer experience in the first place. And now the second part of it is, who should we bring in the room to realize this whole process end to end? So like when we started thinking about how do I map out the current state of the process, we needed people from finance, we need people from Microsoft, from marketing, finance, marketing, sales, operations, product, and engineering. So imagine like all of these people had to come together in the same room. And as we mapped out the current state, it was 230 steps, believe it or not, 230 steps to go from like sales code generation to like an outcome of what you want. So that's when we were like, well, let's take a step back. Can we redesign this whole process end to end and see which are the steps which are really, truly value creating for our customers? And we came down from 230 steps to 37 steps. So imagine the shift. How much reduction did we do in the cycle time from 230 to 37? And now on top of that, like my title is an engineer. FDE is my title, the new title that they've given me. I came up with an AI agent that could roughly automate 75% of those 37 steps. So this is how you think about redesigning the workflows. So from 230 steps, the current state, we went from 230 to 37 steps. And on top of that, I built an AI which could automate 75% of it. So like to sum it up, I wrote this down. There is 3 C's, C, 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 ROI across 3 pillars that we measure currently. Cost to serve, cycle time, like reduction in the time that I talked about, and capacity created. So the end result of what we did in this project was, great customer experience, better customer experience, improved quality for us, improved security, and at the same time, our internal teams had increased capacity to take on more volume of projects coming into them. So like, for me, AI, it alone is not enough. It's like, we gotta think, the narrative around AI needs to change from what AI can do to people to what people can do with AI. And if we start thinking along those lines, you will start noticing the ROI happen for you.
So Deepti, that's an excellent example, and I like the 3 C's. We'll see if our audience can remember those. You might be quizzed later. I think you promised $2 billion in savings to the leadership at Microsoft, internal savings. How's that coming along?
We're very early in the process. I have this framework for you. We are actualizing this, and we should be good. We should be good going on that.
Good. Well, if we have some time today, we may come back to how you're quantifying and measuring that. But there's an important analogy or important relationship to what you talked about, that cost cycle and capacity. And as you think about the business models that all of us are familiar with, I think about my accountant or a business consultant and how this is revolutionizing what they are able to do. And they may have historically charged based on hours, and that's got to shift. So Bryant, maybe you could share some perspective on how this requires companies to rethink business models.
This is one of the biggest negative narratives in the market right now. There's huge pockets or industries of stocks that are just getting hammered because the idea is that they're no longer going to make the same amount of revenue, right? It's mostly companies that are in the business of having intelligence. whether it's lawyers and consultants, and they've sold their products, their services based on the idea of hours worked. Give a lawyer a project, they take 100 hours, they bill you for 100 hours, and that's it. If they're doing the same 100 hours for the same project in 2 years, you're gonna fire them. They should do it in half that time, and you're gonna pay them about half as much money. They won't cut the costs enough to keep the same dollar level of profits. The value of their enterprise goes down. It's very simple. And the stock market is looking and shooting first and trying to figure out the real answers later. And that's happening, and that's gonna impact portfolios meaningfully, and I think that's the right move. But the reality is, those businesses have to evolve. They have to change their pricing models to one on outcomes. It is very, very messy to transition pricing models. Think of the old software sale as a license to SaaS. That was a really good decision, but for 3 or 4 years, those stocks were just a disaster as they went through the transition. That's gonna happen here, and it'll be very difficult to do. And so, what used to be a stock market that valued intelligence, IP, services, and gave very high multiples to that because you had a recurring model with high visibility, is now a market that values fixed assets. We are going to live, it seems, in a world of abundance of intelligence and a shortage of fixed assets. The market is going through a pretty significant paradigm shift as a result. The other way to look at that is the best companies in the world in 2025 and beyond, or 2024 and past, in the last 15 years, were companies that spent the least amount of capital relative to their revenue. That was great because you'd have high free cash flow margins. That free cash can be used for buying back stock and giving it back to shareholders. Those were the best stocks. Companies that spent a lot of money on CapEx were hated. That's flipped on its head all of a sudden. Now, if you say I'm gonna spend more money, your stock goes up because there's a presumption that you're spending it wisely around AI, around the bottlenecks, and that's gonna create higher ROIs, higher earnings, and higher enterprise values. The world has drastically changed, and these business models will have to evolve with it. The reality is some of them will and some of them won't, and that's where, as an investor, this is a really exciting time because the inefficiencies in the marketplace are at extreme levels compared to the past.
So I will admit, Bryant was the one that pointed out the irony for me of having a value investor on my tech AI panel and a growth investor on our energy and electricity panel. So yeah. I think he's absolutely right. So I want to transition back to the journey. And Daniel, you mentioned the concept of shared context within a company. Can you explain what this means and how critical it is to this AI journey?
Yeah, and I look at the AI revolution in the same way that Bryant does, which is multiple phases. The first phase is the individual augmentation. We've all benefited from it, right? You want to figure out your trip, you're going to ask an AI engine to tell you where you should go and plan your trip for you. What's interesting about that is you get to decide whether that answer is good or not, right? Your intent, your context, all of which you fed the AI model or product, and you evaluate that answer and whether it fits your trip. Now, the hard part, when you try to implement this, as Deepti mentioned, into an organization, you begin to think about, well, if you want an AI agent to represent your company, right, not an individual, but an entire company, now you have to figure out the shared context of your organization. What's the intent of your entire team or entire division or a function, right? And this is incredibly difficult. The reason for this is that most of the systems of the past, or current systems really, we're keeping track of the record or the decision or an action that was taken, and you record that, right? And that's great, that's important. But in order for AI agents to be really productive, to understand how to take that action for you, it needs to understand the why, it needs to understand your policies, it needs to understand your intent, right? So the systems of the future, and we're building it, many companies, many startups are building that as well, is the harnessing of this shared intent and shared agency so that you can build an entire context so that an agent can represent an organization, right? And that includes the policy, decision traces, the ontology, the relationship between all your departments and why they matter. And that's going to take a long time, right? I mentioned the 30 years it takes to, for somebody to retool to start thinking about retooling an entire factory floor. I don't think it'll take that long. But as you know, you look around the table, you have compliance, you've got trading, you've got other functions. you need regulators to figure out, well, how do I do this in this new agentic era? Now, we are implementing tools just like Deepti and other companies where we have an agent look at a process. We feed it the API and the screens, and it spits back to you, this is the area where you can improve. And we literally say, write that software for us, right? So this is the world that we're beginning to create, that type of feedback loop where we fully understand the organizational context. And then when that happens across the globe, that's when you see the acceleration of productivity and the gains that everyone's promised.
Great. So I want to stay on that theme, but I want to move to the important construct of trust. I mean, you've described this future where AI agents are talking to each other, and I worry about trust. And you mentioned that I can decide if the chat bot gave me a good advice on my vacation or what have you. I can decide what that is. But if we have all these systems talking to each other, and when we work with an audience of institutional investors entrusted with this important fiduciary duty that they have, I think trust is a really important thing. And it feels to me that it's very human and real. So I often quote with my client service team, Teddy Roosevelt has a quote, "No one cares how much you know until they know how much you care." And I don't know that an AI agent's going to know, or I don't know that they care. So tell me, how do we maintain trust in this era of AI? And it's free game. Maybe Deepti, you got some ideas on that?
So, as I create these AI agents, there is a way to infuse I would say there is a way to codify feelings to it too. Like I can train the AI agent to be polite, get you an executive tone, make sure that when it is giving me a content back, it is customer friendly. So there are many ways of, this is the first time like moving away from traditional software. Traditional software was like 1 + 1 to get me back an answer. It was like very, very, very calculated. With AI, I'm able to tweak around a little bit on the trust boundary just because I understand how to codify the agents in a way that I maintain the trust boundary. So I'm personally having a lot of good fun time right now in my career to be, being at the forefront of the technology and understanding how to play around with the trust boundary. I'm just having a blast of the time in my career right now.
I'd love to add to that. I mean, I think you're 100% right. Trust is critical. And in my personal life, I believe that trust is built through transparency. And I apply that to my professional life, right? I spend a lot of time and a lot of focus on being accessible and transparent around what we're doing in the portfolios, why we're doing it, what's working, what's not working. And that's what builds trust and understanding of where we're going to go in the future. And that's important. And I think it leads me to what's going to matter in the future. If I can, think about what we do with our kids and what we need from a skill set. For my entire career, I've built the team with the idea that IQ is everywhere in our industry and EQ is largely absent. And so I've searched for EQ, right? There's plenty of intelligence, right? That'll come. But if I get the right people, the right EQ, I can build a really unique team and unique outcomes. And I think about our kids. And I think about this idea of what's going to drive them, the idea of middle management being gone. And I have a 14-year-old and an 11-year-old. And the idea is that, we spent decades, going way back, to teaching people trades and skills. And that shifted to teach them intelligence, right? How to code, how to be doctors and lawyers. And now we're not going to need that much anymore, right? What we're going to need more of is EQ. And I'm afraid we spent a generation destroying EQ, and unfortunately. And that's where I'm focused right now. And so those who you can trust in the future are going to have a mindset that gives them the uniqueness of EQ. And with that comes certain skill sets. And I think you'll trust the people who can bring that. And so things like an entrepreneurial mindset will be critical. What does that mean? The ability to fail fast, right? To take risks, to pivot, to fail fast. These are critical, I think, for the next generation, but they're critical for your investment portfolios too, right? If you can't figure out your losers early, you're gonna hold them for a very long time. So self-discipline isn't about intelligence. You bought that stock for a reason with really good intellectual backing. self-disciplines around the emotions, around how do you decide when you're wrong, how quick are you to recognize that, can you handle the behavioral issues with that? And so trust is critical, transparency drives it, but EQ, I think, is going to be the differentiator for people in the future.
Yeah.
I want to quickly add to that. With automation, with AI, you can outsource thinking, but you can't outsource understanding, right? Understanding is something that we share, right? If we share an understanding, then you can move forward, and that's how trust gets built. So even if you're fed information from systems or AI or wherever, you still have to develop meaning and understanding.
I think that's a good point. So I am going to open it up to audience Q&A here in a couple minutes, but let's stay on this theme of EQ versus IQ, and whether we want to call it book smarts and street smarts or understanding or the entrepreneurial mindset. All of those are good examples. So how do we adapt our hiring practices? How do we adapt our talent cultivation practices? How do we train that next generation, whether it's your kids or our youth in our companies, our next generation of our companies? So who wants to pick this one up? How are we changing hiring practice? Deepti, why don't we start with you and come down the road?
So I've been in the tech industry for almost like 10 years now. And initially when I started and I interviewed, it was mostly like, go to like a tech interview and there are like 5 loops and they're gonna assess whether you are a code monkey or no. Some of the times people ask me, what I think about the world, what is my personality like, what are my views and things like that. That was rare back then, believe me. I remember interviewing at like 3-4 different companies, and only Microsoft at that point of time actually assessed like my EQ level, whereas everybody was just interested in how much code I can produce for them. But fast forward today, like when I interview candidates, like I'm not expecting them to be a code monkey anymore. I'm expecting them to have like EQ, but also like there is new thing we're starting to talk about, DQ, decency quotient. And, it's like, are you able to listen through what I'm trying to say? Are you able to give me feedback? Are you able to take in feedback? Are you able to get action-oriented? Do you have let's do it mindset? And are you a respectable, presentable, aware, self-aware personality that we could put in front of the customers? So those are some of the traits I look for. I'm not necessarily looking for a bookish knowledge. I'm looking for, hey, this new technology came like a week ago. What do you think about it? Sure, you might not have heard about it, but what's your curiosity level to even ask me questions around it? Or you're gonna be like, just give me some answer or move on from there. So these are some of the traits I look for. So I'm quite positive about, bringing about a change in the world and moving to EQ and then DQ.
That's a good one. I got to work on that one now.
Desensing? Desensing?
Decency, yeah.
Okay.
I think it's a school of hard knocks, right? Going back to the old days, you're going to get an education. That's going to be important, but real world is where you develop the character traits that I think are going to control the world in the future. And so I think about it like my son. I'm encouraging him to be an entrepreneur, just to start things. And so I think he's on his 3rd business now, and he's 14. They're all gonna fail, of course. That's the whole point. I want them to fail early. We discussed this at lunch, actually, the importance of our kids failing at a very young age, so they know what it's like to fail, to rebound off that, to pivot and try again, right? That's the world that they're gonna live in. And so, and you only get that in the real experiences. And we've done a pretty good job bubbling our kids up, I think, for a long time. And now it's time to pop that bubble and do it when it's not gonna cost them a lot. And
more lemonade stands, yes?
Yeah, more lemonade stands, more simple businesses, agreed.
Great. How is Salesforce adapting their hiring practices?
We're looking for people with a beginner's mindset. The world is changing way too quickly for anyone to anchor on any particular point of view, right? And the need to change and be resilient in that moment and have the grit to kind of power through. Right? You think about every day, we're doom scrolling, and that could really bring you down. But the need to really look at that and say, all right, I'm gonna adjust to this. And I'm gonna come through and think of a new idea, be an entrepreneur, right? And I think that's an enduring trait. We're looking at that. We're lucky. We have still a founder-led company, so we're disrupting ourselves, right? So I think this is the only way.
Yeah. So as leaders, this is the way we've always done it, has always been a bad answer, but it's even worse now. So great. I'm going to open it up to questions. I can keep going with this group, or I can start to tell you about my vibe coding. So do we have any questions? Oh, come on. Oh, I see someone in the back. Couple in the back.
It's interesting trying to look forward as we're seeing these efficiency gains starting to come through. I mean, I can't tell you how many pieces I've read and discussions I've heard about Javin's paradox. Right? I'm sure that you've all familiar with it, the whole demand response to this boom in efficiency. Hey, your billable hour project costs half as much. Well, you're not going to sell the same amount of them. You're going to sell many times more. How many more is the big question. I mean, any thoughts on that for implications of employment more generally, and then also kinds of people you may want to identify?
Yeah, I can start with that. Yeah, I think well, obviously we look at that as software. You know, software is the first industry to be disrupted by AI, and the problem with the most industries is that serving the end of one, meaning that the individual that you have specific needs on what you need. All of a sudden, AI is able to build that for you. So you're vibe coding for yourself. It's really hard to build for an entire enterprise, as I mentioned, but exactly what you want and need, that's unlimited, right? So we're beginning to see that, and you started seeing that with social media, you started seeing that with other technologies where, oh, I'm configuring this for myself, but this is gonna go through the roof. So we actually think the world is still in shortage of code and technology, right? Because your individual needs are not fully met by the current technologies today. So I think that's one of the ways we're thinking about it.
Any implications on the job market? That was the other half of his question. Is anybody bold enough to predict?
I go back and forth. I don't talk to any companies that say they're going to hire more people. I guess I start with that as the basic premise. A lot of them think they're going to use the same amount of people to do more, but that's yet to be proven. Most of them, Coinbase today, laid off 14% of their employees. I mean, that's the path right now. And those people are going to need to do something. Some of these really doomsday articles you see, they're plausible. They are. Going back to where I actually know things, investments, what does it mean for defense? Like, we need to build portfolios that can withstand 10% unemployment, 15% unemployment. What does that mean for fiscal spending, monetary policy? The traditional defensive portfolio, some of the tools you would use to protect yourself against an economic contraction, they might not work because it might happen at a time when the risk-free rate is skyrocketing as opposed to it being the safe haven and falling. That has huge implications for bond sensitives, bonds period, right? Private credit where there's no liquidity. And then also clearly the public markets of utilities and REITs were typically defensive. So the entire paradigm could change meaningfully, but I do have to be thoughtful about the idea of 10% unemployment not being that far off.
I think there was another question there in the center. Do we have the mic?
Thanks. Daniel, your comment about you can outsource thinking but can't outsource understanding. Just expanding on that a little bit, how does the next generation get the understanding if they've outsourced the thinking along the way?
So now, there are some basics in education that we all need, right? Doing basic arithmetic and so on before you should be given a calculator, right? I think it's the same moving forward across many domains and topics. Now, the difference this time around, AI is able to go across many domains and topics. The one thing I'll mention, I talk to a lot of developers, obviously, right, in the tech industry. We used to ask the question of like, why are you such a great engineer? They're like, well, I'm just great at searching on Google and looking at Stack Overflow. Because the problem you're looking to solve was probably solved by somebody else, but in a slightly different context and environment. And the good engineer would look at that code and say, I can't really copy and paste this into my project because it would break these other things. The bad engineer would just copy it and break those other things. And many domains will go through that, and I totally agree with Bryant. So one thing I would charge all of you for your kids and even in your career, you're maybe in your mid-career, late career, maybe a few of your early career in this room, mentor somebody. because they absolutely need it at this point, because they're lacking that experience that they need to fail in the current climate, right? The uncertainty in the market, the frozen employment market for the youth, for the new grads, is real. It's mainly because we are not leaving our jobs. We're staying in our jobs longer, right? Because of the uncertainty, not because of AI. It's many reasons: geopolitics, uncertainty in the market, right? All of these things that the other panelists earlier today talked about. So I would put that as a charge to all of you. Please go mentor somebody.
Yeah, I'll add to what Daniel is saying. We are starting to see this trend of technologists like me participating very closely with universities. So like Microsoft has this program called GIX with the University of Washington. And what this does is I volunteer time to actually go teach the students at the university. So like I said, my title is FDE. I am actually spending time with the students to show them the path of thinking in the way that I already practice and do at workplace. So it's a win-win situation for both of us, because since we are moving in a very fast-paced environment at work, I sometimes don't question many things that I do just because things come naturally to me. But when I'm teaching them to the kids, they actually think me through these whole structured frameworks that I have for you to be able to share. So that really gets my thinking going. And at the same time, we hire from them. We hire from those programs. So I think in the Silicon Valley too, you will notice like a lot of technologists are spending more time in the university. Stanford University is also participating in like allowing Google practitioners to come and actually teach at the university in the evening hours. So we're doing our best, and like Daniel said, it's time to step up and do best for the next generation coming in.
So I probably have time for one more question, or I have a speed round for our panelists. Any more questions from the audience? Okay, so you guys have dropped a lot of great knowledge today. Some of it is around mentorship. Some of it is helping people fail or encouraging them to fail, to try to have this entrepreneurial spirit. So if we all go back to our offices Wednesday, Thursday, or maybe Monday next week, what should look different from last Monday as we approach AI and our workplace? Daniel?
Yeah, I think you should look at the steps that you take and the way you do work. Really look hard at what part of that step requires a human being. We've implemented solutions for financial services organizations in which we've asked that question, and similar to Deepti mentioned, we've cut out most of that. And it used to take 30 steps, 100 steps. It would take 30 milliseconds today. And ultimately, a human being still gets to decide at the end of it. So I would challenge you to think differently about your work processes.
Great. Bryant?
From an investor standpoint, I would say look at your personal portfolios and your professional portfolios and understand what role does every position play on that journey we're about to go on. It needs to have a function, not just be there for complacency reasons, be there because I've owned it for 10 years, because it worked well the last 10 years. If you're not having the conversation about it's where it's going the next 5 years, then you're probably not entirely sure its role in the portfolio. And so don't be complacent. Take a look at everything in the portfolio, understand its position, its role, and whether it's going to do its job in the next paradigm, right? Which will look very different, I believe, than the prior paradigm.
Okay, I'll get going. It's funny you asked me this question. I was telling like some tricks that it's like when I meet people from different backgrounds, I tell them tricks on AI that I use. And I gave, I think, 3 tricks to someone last night. I forget their names. But first trick is like, when you think AI is giving you back a bad answer, or you think it's a bad answer, you're probably not prompting AI correctly. I think a lot of the early adopters of AI come to the fact that AI is not good. No. You're probably not prompting the AI correctly. So second trick, how do I even prompt AI correctly? Is like you're talking to ChatGPT or something, or Copilot, or like any other platforms. You say like, hey, I want to do this X thing. How do I prompt you? What question do I ask you? But by the way, I also want you to think about these other, XYZ things as you think about, giving me back a system prompt. So ask AI to give you the prompt better. Second trick, okay? Then the third trick, I know a lot of people in this room make presentations. GPT 5.4. 5.4 is the new model that has come, which was trained recently. It came like a week ago. Please try that on your PowerPoint presentations. You will love what it creates for you.
Fantastic. That would have been handy. All right. Well, there are a lot of things going through our minds today. AI doesn't just change jobs. It changes expectations. And we don't even know, we can't quite measure what it's going to change with respect to expectations. It's changing business models and certainly portfolio outcomes. So lots of real risk and opportunity. Thank you. Thank you, guys.